Wanted to share a quick covered call ETF here in Canada that's yielding over 12% yield. It is ticker LIFE. It's the Evolved Global Healthcare Enhanced Yield ETF. You can see here trading at about $18.80 a share. This one here has a yield of about 12.2%, pays out a monthly dividend yield. So you're getting about 1% plus of your capital back each month. Looking at this one kind of over the shorter term, it's been pretty flat, give or take. In the last year, though, hasn't been performing too well, down about 16%. So someone could say you got 12% back in dividends, but you lost 16% in value. I don't think that as a generalization is too fair or representative of covered call ETFs overall, because just this space of healthcare, if we look at the S&P 500 healthcare index here, the last year it's down about 10% as well. So it's kind of just following that trend of the broader industry and the underlying stocks that it owns here. They don't write covered calls on the entire equities that they hold in this account. They're just driving premiums to enhance yield, albeit this one is probably a bit more of an aggressive one, just given that 12% yield that it's driving over 5 years. Kind of see here, it was actually holding up pretty good. It was up about 5-6% up until 8 or 9 months ago, the Trump administration and lots of the rhetoric coming out of that administration around pharmaceuticals, tariffs, what their thoughts are on certain components of the healthcare industry in the U.S. I think kind of taking down this entire space a little bit. But overall, if you want to have some exposure to healthcare, you want to have a very high yield stock, this is one thing to consider if you're open to covered call ETFs. The watch out is on covered call ETFs, you do tend to pay a higher management fee. So if you're holding for a long time, that's just something you want to be aware of. Probably 70, 80 basis points would be my guess. If you like this kind of content, be sure to subscribe to the channel.